All right, so the last time you were on was about 2 years ago. You guys were just rolling out a wallet. You'd been in crypto, but like dipping more of a toe in the water in crypto. And I gotta say, going into that conversation is a little bit different than I feel going to this conversation. So, going into that conversation, it felt like Robinhood was coming a bit from the TradFi sector, coming as an outsider into crypto. In this conversation, Robinhood has spent another 2 years in the space. You've gone through the bear market. You have your own Wells notice from the SEC, which many of our esteemed crypto companies have, joining the ranks of Kraken and Coinbase and
Uniswap.
MetaMask and Uniswap. So you've kind of proven yourselves, I would say. You get like a badge of honor. You're earning your stripes, really.
I don't know if I'd go that far. No, we're still a small upstart in the space.
Well, congrats on what you've done and your commitment to crypto. It's not just a fair weather friend. It seems like you guys are here to stay. And I want to start with this question. So at the highest level, how important is crypto to Robinhood right now?
Yeah, I think that's a deep question. I think that maybe the interesting perspective that I have is we have a large crypto business, right? We report on our revenues and our trading volumes, and you can see with the data that we've been gaining market share over the past multiple years, and especially in retail, we don't have as broad of a institutional offering and a B2B offering. And we've been very focused on retail, direct to consumer crypto trading, and the market share is looking good. I mean, we're right up there with Coinbase, and the customers love using Robinhood to trade crypto. We also have a big TradFi business, and we can see both of these businesses simultaneously. And one of the things that we're seeing is how efficient it is to operate a crypto business. And a lot of the things that require centralized legacy counterparties in TradFi are being done just in software. So, for example, transfer agency, clearing and settlement. You mentioned Uniswap, market making, stock lending. I mean, these are things that entire businesses and centralized organizations are set up to do that can just be done in software. And that does two things. One, it lowers the cost of serving customers and operating the business by roughly an order of magnitude. And that's because the more counterparties you have, those counterparties need to be supported. And there's fees and complexity and folks that manage all these relationships on the TradFi side. When it's software, it's much simpler. So we can see the power of it in terms of operating the business much more efficiently, providing the same basic types of services. But the second thing is, from a customer standpoint, there's actual functionality that having the software foundation provide allows in crypto that is very, very hard to get in TradFi. So, for example, one of the things that we've been a pioneer in is 24-hour market, which is the ability to trade U.S. equities around the clock. And we were the first to do that for individual named stocks. Now we offer over 1,000 single name stocks on 24-hour market,
Wow.
which starts trading Sunday evening, 5 p.m. PST, 8 p.m. Eastern, and basically runs till Friday evening. And one of the things we've been thinking about is, why not 24/7? Like, why can't we just do it on Saturdays and Sundays? And what about holidays? Like, it would be amazing to be able to access the capital markets on Christmas, for example. And the reason is that the centralized clearing houses aren't open during weekends. So they have to have people coming in to actually manually facilitate this activity. And on crypto rail, since it's in software, you get 24/7 basically for free. And you get fractionalization for free, which in traditional markets is extremely complex to manage. So it's not just the efficiency, but it's also this new foundation where software is providing a lot of these services, allows for product experiences to be delivered much more simply. So I think that's the real advantage. And so I think almost like the importance of crypto might be the wrong question, because like when a lot of people think about crypto, maybe what you're referring to is like things like meme coin trading and crypto assets and things like that. But I think that in another sense, crypto is just like technology moving forward, and it's part of a long running trend that has gone back multiple decades at this point, and is kind of accelerating with AI, of software sort of like systematically reassembling the foundations of like all parts of society. And I think financial services, including the way that currencies are managed, have kind of been a laggard in the space, but this is just like technology further subsuming that and turning physical processes into software more aggressively.
Vlad, the Robinhood perspective, I think is pretty interesting, because I think you guys operate in 4 different quadrants that I think we're not very used to in the crypto space, because you guys are both on the retail and institutional side, and you're both in the crypto and TradFi side. And then there's like institutional crypto, there's institutional TradFi, there's retail crypto, retail TradFi, and you're in all of them. You got perspectives over all of them. And I'm wondering, like, as the Robinhood consumer base, what are they looking for out of a crypto product? The crypto listeners that are listening to this product are going to be like the crypto natives. These are the people who are going to be like, we self-custody, we touch the chain. But the Robinhood crypto consumer base is different, probably different than what might be the typical listener of the podcast. What are the consumer preferences of your base of customers, and what are they looking for both out of crypto products, both out of the institutional side of things and the retail side of things?
Yeah, I think that it breaks down into different types of products and services depending on your segment. So, for example, you've got active traders. And the way we actually kind of think about our business is all the things we do for active traders, all things that we do to be the primary financial institution across the board for the next generation of customers. And that's millennials, but also Gen Z and beyond. And then all the things that we do to take the things in both of those buckets and expand them internationally and expand them to other customers, for example, institutions and small businesses. And I think crypto fits into all 3 of those buckets. So crypto active traders are looking for low costs, particularly as the trading volumes increase. They want to have the easiest and lowest cost experience. They want advanced tooling, like awesome charting and access to data feeds that are real time. And they also care about coin selection, because they would prefer to not disperse their trading activity across a large number of trading platforms. Because generally, particularly if you're doing sophisticated things or cross margining, having like the capital all in one place is ideal. So that's the active trader front. The more buy and hold investors care about security and safety and being with a platform that they know is going to be around for a really long time. They care a little bit less about the active trader things, but they want to make sure like regulatory compliance is tight, and they've experienced a lot of these breaches and a lot of companies that have offered things like high yields and great rates just disappearing overnight. And so that's a big concern for them. And within that segment, I guess within both segments, you have this idea of self-custody, and not a lot of people actually utilize self-custody, but they do like to know that it's there if they need it.
Over time, would you say Robinhood is going, the arc of Robinhood, is it becoming more crypto? Or are you just like equally optimizing on both?
Yeah, I think that I like to think of our business as sort of 3 arcs. One is all of the things that we're doing for active traders. And I'd say that, crypto in that bucket is an asset class. It's also like a fundamental technology that might facilitate the global expansion of it. But for example, like crypto spot trading is incredibly important. Also, crypto derivatives are important. And these are sort of like an amalgamation of crypto as an asset class with typical traditional features. Like futures have been around for a very, very long time. And crypto derivatives, I think to a customer standpoint, feel more like a TradFi product than a crypto product in many ways. On the non-custodial side, we view crypto as an accelerant to making all of our products international and being available across all sorts of different markets and jurisdictions. And I also think like over time, you'll see the TradFi and crypto worlds continue to merge, and you'll see tokenization become a bigger deal, and that'll start in overseas markets first. I think that the US will actually be a laggard here to embrace tokenization. I think you'll see it in Europe and other markets internationally, but I think eventually it will come to the US as well. And I think predominantly that's for all of the efficiency reasons and the fact that you can offer 24 hours and fractionalization more easily. I think you can also look at the success of dollar stablecoins, which are driving the lion's share of transaction volume on chain right now. I saw an article a couple of weeks ago that you guys probably saw it as well. USDT on Tron is now exceeding Visa in daily volume. And I think the reason for that is if you look overseas, people really want dollars. I think there's this narrative of Bitcoin being the greatest store of value for people in countries where currencies are hyperinflating and they want to kind of flee the local currency and they want a store of value. But it appears that people want dollars, and kind of counterintuitively, crypto has become a mechanism for people to get their hands on dollars in these markets. And that's kind of driving a lot of this activity that you're seeing. And so you should assume that, the same holds true of US companies. People would love, sophisticated individuals overseas who have money are turning to the US markets. They want US equities, they want US assets. And if you can enable people to have that on a much bigger scale, I think that's what tokenization enables. And you'll see it overseas first. It'll lag in the US for a couple of reasons. Number one, we already have it decently well in the US. Like maybe it's not 24/7, but with Robinhood, it's 24/5. So pretty good. It's pretty easy to open a Robinhood account. So even though it's maybe not decentralized, most people don't really care and they just want access, and we do a pretty good job of that. And then we also have like this entrenched industry of all of the clearinghouses, all of the counterparties, all of the market makers, and they're happy with how things are going by and large. They don't want major changes, and there's going to be like friction to make major changes to the system over here. So I think that's why things will be slower in the US. And it's kind of one analogy I give is like the US sort of like pioneered a lot of advances in transportation. And now it feels like we're behind. Like high speed rail has taken off in China and a lot of markets and is not really here in the US. And global payments is another example, cell phone usage, where kind of the technologies was created in the US but adopted overseas. Tokenization, I think, is going to be the same. And a big part of it is the US is already like good enough. So the incentive to go to the technological frontier of these technologies is much, much lower over here.
Yeah, I think that's right. It's kind of like, Clayton Christensen's innovator's dilemma, where the US already has all the clearinghouses and all of the banking infrastructure, et cetera. So it doesn't really feel the burning need to kind of upgrade. And so other jurisdictions, emerging markets, et cetera, kind of like leapfrog us. The broad stroke of what I hear you saying, Vlad, kind of aligns with a thesis that Bankless has held, that David and I have long held. And I think it's actually starting to come to fruition. We've called this before like the DeFi mullet thesis or the crypto mullet thesis. And it goes like basically you've got fintech in the front and then crypto in the back. And the idea behind this is that fintech companies, in particular companies like Robinhood, are uniquely positioned to basically swap out your banking infrastructure over. When I say banking infrastructure, I'm talking about the clearinghouses, the settlement, the like old style of tokenization, the stuff that takes off banker holidays and that doesn't work the weekends, and all of that legacy stuff, the mainframes of the world, the back end of finance. And over time, just kind of like swap it out for the new crypto stuff. And the beauty is you don't have to do it overnight. You can kind of like do it as you're doing it right now. So first you have assets that are crypto assets listed that are settled on chain. And then what do? You break into a non-custodial wallet. And so you start doing that. And then maybe you acquire a crypto exchange, which you have. And then you get into more crypto native type use cases. And over time, you're kind of like hot swapping the financial backend from the old legacy system to this new system. And I don't think that Robinhood's obviously the only entity that's going to discover this and go through this transformation, though you're positioned well, and you may be one of the first to kind of see this. But high level, do you think that's effectively what's going on here? Is we are software is eating the world, the Chris Dixon line, and now software, it's finance's turn. It's all done in paper and faxes and legacy mainframes, and now we're making programmatic blockchains. And fintech is just going to basically hot swap the back end of its financial system. And that's going to happen over the next 10 years. How close is that aligned to what you're saying, what you're seeing?
I think that's pretty close. I mean, with the caveat that incumbents are going to be slow. I mean, a lot of the incumbents have still not made the transition to servers, right? They're on mainframe. So you have to go from mainframes to servers. And then, of course, there's like the on-prem to cloud transition that Robinhood didn't have to go through because we were sort of like formed at the point where cloud became kind of good enough. There was still a little bit of friction, actually. Like there was a lot of pressure for Robinhood to be on-prem because the market makers and counterparties didn't really trust Amazon to provide reliable services, even though in hindsight, we know Amazon services are much more reliable than you managing your own on-prem infrastructure. And so we were kind of the first cloud native brokerage platform that got to scale. And then you have AI and crypto, which are the new platform shifts that can change the technology as well. So I think a lot of the incumbents are looking for COBOL and Fortran developers, and that's a big problem. Yeah, I think the question will be, are they going to jump and adopt crypto? Well, you kind of have to either discard all of the old stuff or like really quickly go through all the shifts, because you're not going to be able to run a blockchain node on a mainframe on premise unless someone's figured out something that I haven't seen yet. But I think that's a real problem for incumbents. And I think it's further exacerbated with AI when now you're thinking about, okay, like, how am I going to train models and augment or replace a lot of the internal processes that I have, which further accelerates some of these trends that you guys have been mentioning.
To continue leveling up your crypto game, then you need to get on the Bankless newsletter. It's the world's most popular crypto email and is completely free. Just click below to sign up.